years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Monday, December 8th, and it's kind of a holiday. I mean, it feels like a holiday. It feels like a holiday. I did work this weekend, by the way, a lot on a paid newsletter that is basically going to be the 2026 Beat the S&P for portfolio. If you don't know, in Savvy Trader, I do have a portfolio that paid newsletter members get free. And it was a portfolio set up in January that hopefully beats the S&P through the year. And this one does. I think it's making about 20-something%. You'll find out about that once I release it. Will probably come out next week. And it's a really, really long newsletter, in depth, super in depth. And, it goes into what I expect in 2026. And again, realize, do not get FOMO. Understand that I'm laying the groundwork for exactly what I think should be done in 2026. Doesn't mean that that won't change, but this is a good look at a portfolio. And key point, I use Sidekick specifically to analyze the 2025 portfolio and push it into 2026. And so that's all going to be in that newsletter. Look at it. And I read this great. It's on thestreet.com. It is a great, and by the way, when you go to thestreet.com, you absolutely realize how good Seeking Alpha is without any pop-ups. Because this one it's filled with pop-ups. But this is a longtime fund manager who offers bullish outlook for 2026, what he believes in. It's a great article. And it's a great article. And here's what I would do if I were anybody who doesn't have Trendspider. What you're seeing on my screen is Trendspider. These are the charts that I do. And you would get Sidekick as part of it. But here's the killer point. If you go to Linktree and you click on this top link for Trendspider, you can get the pre-holiday sale. It starts now. Okay? And here's the benefit of this is that you can get a 14-day trial for $1. Are you kidding me? It's $1 for 14 days. And you get Sidekick, you get Signal Stack, you get a premium indicator. And again, it's a savings of $1,159. Now, these are the annual plans you're seeing. Sign up for any annual plan, whether it's advanced, enhanced, premium, or standard. I would personally go with the advanced if you don't understand charting. Why? Because they offer 52 training sessions per year. So you get a product expert leading you through how to set up your charts, how to understand the charts, potential additional indicators that you might want to use, what the meanings of those indicators are. A person who sits on a Zoom call with you 1 hour per week for the whole year for $64.20 a month. Not $64.20 per training session, because if you assume there's 4 training sessions in a month, divide that by $64.20, and that's what you're paying per training session, and you're getting this tool for free if you just assume that you're paying for the training. And again, you can try it for $1. So if you're not sure if you want it, but let me go over why you may want it. Because Turtle Strategy has gotten you back in. Okay, it's gotten you back into SPY. So is 2026 going to set up for a very good year? Maybe. But you may say, well, what's the Turtle Strategy? Well, here, I'm just going to Google this one. Turtle Strategy, Trendspider. And there we go. And it will take you to the Turtle Strategy store. Now, this is a strategy. Again, the Turtle Strategy is a legendary trend following system built around a simple but powerful idea. I think it made $120 million, something like a crazy strategy. And you can import it for free. Take the trial for $1. Import the Turtle Strategy. That's it. My view of 2026 is shaping up what I'm going to do for the end of the year. So between now and December, I am setting up 2026. I think your assessment of the market should help you with those decisions over the next few weeks. And Trendspider and Sidekick may be able to help you because, again, remember, I had Sidekick do a lot for me. And now what did Sidekick do on Friday? Well, Sidekick's top 3 candidates were Carvana, SoFi, and Marvel. Those were the top 3 candidates to get entered into the S&P 500. Well, guess what it did? Carvana was its number one, its top. That was a 15% gain. A 15% gain. Okay? So if you just pulled up Sidekick or you wanted to say, hey, Carvana, CVNA, I want to see this one. The 4-hour algorithm got you in down here at 326. That's 35% in 11 days. Because where are you trading in pre-market? You are $435. So again, pretty good setup right there. And if you look at it, here's the performance chart because Trendspider allows you to back test a strategy. So if you bought 24.6 months ago, Carvana, you've held it, you've made 1,205%. Now, if you traded over those 24 months, in the 4-hour algorithm, there are 24 positions. Okay? Your average win is 40%. You make 636%. For me, I'm okay making 600, even though I'm making half the performance of buy and hold. The volatility of this particular stock would push me towards wanting to trade it instead of owning it. That's the benefit of having charts. And if you just have a basic chart, you can go in there and you can look at the MACD and you look at the RSI and say, you know what? It's extended. I want to get out. I'm 10% up. I'm 20% up. I'm 40% up. The average win is 40%. So as you started to win on this one, your average should have been 40%. And again, it's come close to making it. But Trendspider is having a holiday sale. And this pre-holiday sale, it lasts for one more day. One more day. If you miss Black Friday, this is the sale of the year. And I will tell you, if you can't afford $1, have your family and friends give you maybe it's a black elephant kind of thing where they give you $1 and you can try it out. Or maybe you put this on your stocking list and you say, you know what? Buy it for me now and it's my Christmas gift. One of those things. Because let's just go over exactly what Sidekick has done for us. Okay, Sidekick is Trendspider's AI. The reason why it's better, it doesn't use internet data. It only uses what's actually in Trendspider, which are facts. But let's go over some of the things that Sidekick has told us just in the last couple of weeks. Okay, ASML, it told us the earnings. It said, you know what? You don't want to buy these earnings because they typically pull back. It did. And then it said, wait a few days, buy it. It did. It told us NVDA earnings perfectly. It said, don't buy it because typically it pulls back. It did. It evaluated my own personal portfolio and suggested how to optimize it. Again, for $1, you can go and ask AI how to personalize and set up your portfolio for 2026. Maybe it gives you some ideas. And finally, it picked Carvana to be added to the S&P. Any one of those 4 things could have made you back the subscription fee. But again, if you're getting it for training and you're paying $64.20 per month for 4 trainings in that month, then you're getting the tool for free and you're getting Sidekick included. So it can be a powerful, powerful tool. Get it? Set yourself up for 2026. And like we talked about, Carvana's wild ride from one of the most heavily shorted stocks to S&P 500 inclusion. It is not something that, from a fundamental standpoint, I would be investing in. It's not. It's just one of those money-making opportunities that you can find through the internet and putting the right the right target on it. So for Carvana, for Open Door, for things like that, I am putting a good target on it and I'm following somebody. Even Carvana right now has an 8.12% short interest. That's why that move is so heavy in the after hours. And I'll just put this out there. If you don't think that Eric Jackson is right on Open Door, he was right on Carvana. Okay? He was right. Everyone is talking about Carvana going from $3.50 to $440 in 3 years. He was right. A 125 bagger. That is a crazy, crazy gain in 3 years. This is Tesla style investing. Here's the truth. Open Door is setting up for the exact same kind of move under CAS, and almost nobody sees it. Why am I holding Open Door? I'm holding Open Door for 2 catalysts. The first is I think it's a good stock like Eric does because Eric sees it. It's expensive. It is not a value play. But the second, if you've been following his story, the second Drake buys that and retail starts understanding that, that is a 20 to 30%, perhaps even 50% move in the stock. So again, Eric Jackson has shown himself to be a winner. I am in there. It's not my whole portfolio. It's not even 1% of my portfolio. It's a small position, but I want it because I'm in it. As it starts to win, I will add to it. And if we just look at the chart, I mean, from an Open Door standpoint, look at the chart. The 4-hour algorithm got you back in at $7.49. You're trading right now in pre-market at $7.24. I think I'm in at about, I think my average purchase price is around $7.50, something like that. I've added to it. I've taken away some, taken some profits to try and get into this one. Now, I will say Alpha Picks portfolio continues to outpace the market. And this is just the snapshot of what you get on the Friday newsletter from last week. And let's just go over this, okay? The bond market's now signaling expectations for fewer rate cuts in 2026 with the 10-year set for its biggest weekly increase. Again, this is just part of the Alpha Picks portfolio. You get this Friday recap. But I wanted to point this out. The Alpha Picks portfolio bounced off strong November lows, outpacing the overall market as it tends to drop sooner in sell-offs, but leads the gain when conditions turn positive. The remaining Q3 Alpha Picks earnings were strong, with all 4 names last week beating and lifting the overall beat rate to 92%, led by CRDO. And I know I brought up CRDO before because back here in January, okay, back in January, let's move this back. In January at about 70, I think it was, $70. This was named the top 2025 pick by Steve Kress. That wasn't part of the Alpha Picks portfolio. That was part of Seeking Alpha Premium, and they're having a special too, Premium and Alpha Picks. So you may have said, oh, I don't, you bought this in January 2025 at $70. That's crazy. It's trading at $175 right now. The 4-hour algorithm got you in at $145. And again, CRDO blew away their earnings. They're trading right around that 179 support level right there. But you get this as part of your Alpha Picks. This is why I suggest the bundle, because we do have the top 2026 stocks coming up as part of Premium. And if you only get Alpha Picks, you don't get that. But if you get this bundle, you get that plus the Alpha Picks portfolio. And what's the Alpha Picks portfolio? It's 2 data-driven stocks per month. One on the 1st. We just got one on the 1st, and we get one on the 15th. People weren't happy about the one on the 1st. It's down. But again, if you enter on the 1st and the 15th with 1% of your portfolio, even if you had $100,000 in this portfolio and you added $1,000 of the December 1st pick, You're not down 50%. You're down like 15. So what's that? Of a $100,000 portfolio, you added in 1,000, you're down $150. Meanwhile, CRDO, AppLovin, all of the other names that I mentioned, they're way, way up. And as part of Seeking Alpha Premium, you get my favorite article every Friday, Catalyst Watch. And this sets me up for the week. And by the way, in the podcast, I'm going to be taking off tomorrow because I'm meeting with my accountant for the year end. And Thursday, I have a business lunch to go to. But this particular article sets you up for the week. We have a Fed decision. And on Friday, not only do you get the NASDAQ 100 editions. So maybe later this week, maybe that $1, again, what can you use Trendspider Sidekick for? That $1 14-day trial. Ask it which stocks will get added and which ones will get removed from the NASDAQ 100. Go and ask it. And by the way, in the middle of the week, you have a Fed decision. If they don't cut rates, expect the market to crash. If they do cut rates, expect the market to continue going up. And then you have a big week of earnings, okay? You have Adobe, you have GameStop, you have Oracle, you have Broadcom, you have Costco, and more. Now, Adobe is one of those stocks. It's been beaten down. Look at this one. This one has just that $530 shelf right there. That's a weekly. This is the 4-hour algorithm. It got you in. Down here at 322, you're trading at 346. It's had a nice run up into earnings. Is that a good thing? I don't know. I don't own Adobe, so I don't necessarily look at it. Then you have Oracle, and this one I find interesting. If you look at a weekly chart of Oracle, you've seen that pullback. And what's that pullback? That pullback is because they're spending too much, and OpenAI has just made a commitment, but it's Oracle spending, and the market doesn't believe that OpenAI will have the money to actually justify Oracle spend, so they may fall short. And so they think that Oracle's spending too much money. This stock was trading at about, let's see, at its highs, $345. It's at $217. The 4-hour algorithm and myself have put in a floor there at around 200. Again, you're trading at 217. The 9-day, the 21-day have turned positive, but the 50-day and the 200 are still slightly negative. The 200 is kind of flat, but you can see there are a lot of people with that volume shelf up there that are buying above this, that are buying and holding. A lot of people are sitting there holding at about $300 when you're trading at 217. A lot of people. Now, I will tell you the 4-hour algorithm, if you wanted to question, oh, was that 206 a good buy? We'll find out. You could ask Sidekick about this. Again, if you own this stock at $300 and you say, well, is it good to buy? Go and ask Sidekick. Should I hold it past my earnings? Because it's coming up on Wednesday. Now, the 4-hour algorithm getting you in, back tested. You make 131% versus 86% if you bought and held for 24 months. You have 23 positions in this strategy. So even though the last 2 buys have come out with losses, you actually almost double the performance. And then we have a core portfolio stock, Costco. I love Costco. I'm a Costco member. I go to Costco at least like once a week. Now, if you look at this one has started to turn over. It's trading sideways. If we look at this one, you can see quite a few people have been buying up at this level. You're trading at $8.95 in pre-market. Is it a $1,000 stock? It's expensive. Again, this whole article sets you up for Costco by telling you exactly what the street is looking for and what you can expect. I don't own this one. It is in the core portfolio. It has done really well. It's just expensive for me. I don't want to hold this one. I want Walmart, and I hold Walmart. But if I had to buy a retailer, well, if I had to buy 2 retailers, it would be Walmart and Costco. But you can see, for me, trading at 45 times forward earnings when they make their money off of memberships, I don't necessarily want it. But does the 4-hour algorithm? Does the 4-hour algorithm work well? Well, it makes you 52% versus 51% buy and hold, 23 positions over 24 months. It has you out. Will it get you back in, and will it start to soar? Who knows? Again, you have to just make sure that you know what you own. So let's talk about some other stuff. This is Chris Camillo, and he's a retail trader, kind of, he turned like $5 into like 6 million, one of those guys. And he has a social arbitrage play and why NVIDIA might explode. He's kind of putting it out there. Why do you want to invest in NVIDIA at these levels? Is it crazy to think that NVIDIA has more room to run? He's putting it out there. He thinks it's not crazy for the Trump administration to actually go all in with AI and say, we're committing and we're going to buy NVIDIA chips. Now, from a standpoint of a chart, you're seeing right here, we're putting in this nice little level at 180. I've got a level down here at 140. That's where I want to buy it, between 140 and 180. Now, if you were to go and look at NVIDIA, is it expensive? You bet it's expensive, but their growth is phenomenal. Wall Street says it's a strong buy. There are, 64 analysts that say buy this. Their average price target, 37% above where we are today at 250. Again, Chris is making the judgment that all you have to do is get Trump say buy, and we're going to take off for that 250. But it's expensive. Now, it's not as expensive as it has been in the past. Its PEG ratio, where you're positioning price to earnings to growth, is still 1. The sector's at 1.72. I continue to think that AMD outperforms, but NVIDIA is still a large portion of my personal portfolio. So I'm fine holding it. And what's the best data center play? Well, right now, Seeking Alpha just asked 2 of their experts, what's the best data center play? Let's see. Is it AVGO, Broadcom? Is it NVIDIA? Is it Nebius? Is it IREN? They go over it right here in this article. Understand what you own. Go and do your research. Those are 4 stocks. Let's see. I want to own AVGO. I own NVIDIA. I own Nebius. And I own IREN. So I know what I own. Now, Netflix. Netflix is, they just announced on Friday that they're going to buy the WB. Or I'm sorry, Warner Brothers. I think it's WBD is the symbol. But again, do you buy the December dip for the January rip? Look at the seasonality of Netflix. It only wins over the last 24 years. This is a bad month for them. But January is a great month for them. Look at that, 74% win rate. The average return in January, the average return, 15.8%. So could you be setting up for a rip into January? Is this a trade? Well, look at the weekly chart. It does look weak. Now, the MACD is reset. The RSI is down here at 38. The 4-hour algorithm makes you 104% versus buying and holding makes you 108% over the last 24 months. It doesn't have you in, it has you out. I'm saying that $100 should provide some level of support, and we're trading right at $100. Is that one you want? I'm holding this one, and I'm looking to add to it. So maybe it's a good trade going into January. And again, this is what Trendspider can tell you. It can set these things up. Now, you may like Tesla. And Tesla, I say you hold it. But testing the seasonality, these are the most bullish 2 weeks of the year for Tesla. 9 of the last 10 years have been green with an average gain of 3.7%. Again, you can break this down by week. This is over 10 years. Is this something where Elon comes out with their 2026 goals? Is that potentially what pushes this one up? Again, seasonality. And let's just go and do a special thing. So Shai Bulor, who everybody knows, I love this guy. He is great. His thesis on most of these stocks have worked out. He's got 5 names for the space economy. And if you don't know, so the problem with data centers here on Earth is that they need cooling. And so there's a lot of energy that's needed to cool these things down. Well, with SpaceX and their space satellites with the data, we could put data centers into orbit. And so he's saying, hey, with Elon saying that the space economy is the most important, here are 5 names that I like. And you can read his entire thesis on these 5 names. So what did I do? I went into Sidekick and I said, hey, I first went into Perplexity and I said, write me a prompt based on this tweet for Trendspider Sidekick and give me a look at it. 5 stocks. Well, I found them on the internet. I don't know anything necessarily about these stocks. Look at all that Sidekick came back with. It came back with a full description of Rocket Labs. So even if you didn't have Seeking Alpha, okay, and you said, ooh, I just saw these stocks. Well, I want to look at it. You can go to Sidekick because what does Trendspider have? It has all the fundamental data. It has all the charting data. And it goes over all 5 of these. Okay? Then it does the risk-adjusted return potential matrix. 6 months upside, 6 months downside, 1 year upside, 1 year downside. Tactical swing, 1 year position trade, 5-year thematic hold, it rates them. Short-term swing trade, 6 months. Why? It picked Rocket Labs. Intermediate position for 1 year, it picked ASTS. Long-term, 5 years or more, it picked Rocket Lab. Now, could it be right? Absolutely. Could it be wrong? Yeah. And it guides you what could go wrong with each one of these. The bottom line, Rocket Lab offers the best risk-adjusted returns across all time horizons with proven execution and the clearest path to profitability. ASTS, the highest upside if constellation deployment succeeds, but dilution and execution risks are extreme. And then it goes into the other 2 are distressed turnaround plays. Avoid unless you're comfortable with 50% downside scenarios. Again, I didn't do anything other than put this into Sidekick, and it went through a particular stock for me. Now, if you want the 4-hour algorithm on Rocket Labs, we can see how this one trades on the 4-hour algorithm. Got you in here at 41. Down here is the performance chart right next to my head. You can see the performance. This particular strategy, over 24 months, it trades 25 times. You win 40% of the time. The average win is 43%. Now, performance, it makes you 347%. Buying and holding, 1,030%. If I wanted to buy it, I buy the dip, buy it at 41. It's pushing right up into its 200-day, okay? You just had the death cross there. Will that 50-day turn around? Well, read Shai Bulor's or go and get Sidekick for $1 for the next 2 weeks and just look at it. Because again, it's $1 freaking dollar. These are the things that you can do with the tool. And I want to give you a little education, okay? Now, my podcast is a business. So here Sabrina literally asked ChatGPT to make as much money as possible with any business. And if you want to know how to make a business, you can ask ChatGPT that. She is an AI expert. She has helped me tremendously with a lot of experts. And she shares all of her prompts. She shares everything. In the tutorial, she's going to give you the exact prompt chain to run in the same AI chat. You'll get 1 business idea, 1 mentor to study, because she makes the point. You can have ChatGPT actually act as a mentor. So say you don't want to take Trendspider up on this annual offer and you don't want the 52 trainings per year, you just want a standard. Well, get the standard plan for $41. Again, I would argue that $20 per month could be better spent on this because you could use AI as a mentor. You could basically tell it, hey, I want you to act like Warren Buffett. I want you to act like Mark Minaveri. Pick whatever trader you want. Bill Ackman, whatever trader you want. Set up AI to act like that trader. Find you stocks. That's how you use AI. That's an educational piece for you, just to give you exactly what it is. And Sabrina does a great, if you're not subscribed to Sabrina, do it on Substack. But again, I would urge you, all of the sales are here on Linktree. Trendspider, $1 for 14 days. Then I urge you, get premium and alpha picks. Because premium, you're going to want those top 2026 picks. And if you just want those picks, wait until it comes in January and then get a free 7-day trial, because Trendspider does come with a free Seeking Alpha Premium comes with a free 7-day trial. You just get Black Friday sales right now. It's only on for a limited amount of time. I think it's going to end Wednesday or Thursday, somewhere in that neighborhood. So take advantage of the sales. And Trendspider, this holiday pre-sale, I think it'll go back to $5 trials or $7 trials. But you've got this for a limited amount of time. If you even think about it, then take advantage of this offer. Now, if you have any questions, again, everything's on Linktree, even my email address. I will talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.